Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. Here are the headlines. Indian markets trade as auto stocks continue to stumble in trade. And open interest surges in PC Jeweler as traders take fresh short positions in its stock futures. West Coast Paper gains more than 8% after announcing its deal into buying controlling stake in International Paper APPM. And Prime Minister Narendra Modi and other members of the Union Council of Ministers will be sworn in today at the Rashtrapati Bhavan at 7 p.m.
Okay, those are the top headlines for you at this hour. Let's also tell you what's happening on this expiry day. Today is the expiry for the monthly as well as the weekly contracts expire. So you could see some bit of volatility coming by in the second half of the session. But as we speak, Nifty is back above the mark of 11,900, firmly trading with gains of about 50 points. Remember, the May futures throughout this week have been slipping into discount. Right now, the futures are trading with a discount of almost 8 points. And the rollovers so far have been in line with what we've seen, average rollovers for the last 3 months. So currently, Nifty rollovers are at about 52%. Bank Nifty has been the outperformer for May series, and that's the reason why there is more profit booking that has kicked in for the banking counters. So right now, Bank Nifty is also trading with gains of about 0.3% around the mark of 31,400, and the rollovers are at about 56%. Yesterday, when the markets corrected in the second half, you did see the volatility index moving higher. But this morning, we've seen India VIX cooling off quite substantially. I think this is the lowest level we would have seen for a really long time, because during the May series, it had touched those levels of 28, 29. So 15.4, it slipped below that mark of 16. Overall, if you look at what range that one can expect on the upside, of course, the all-time high levels are at 12,041, so that can be one. And closing above 12,000 then remains a very, very important point. Overall, distribution-wise, maximum open interest is at the 12,000 call strike and the 11,800. So that gives you pretty much range for the day. But looking at the options data for the day, let's just pull up the open interest change plate as well. Yesterday was the day when there was a lot of action on the 11,900 put, and today the 11,800 put is seeing a lot of writing coming by, and the 11,900 put and call both are seeing some bit of addition. Since yesterday, if you would have watched out for the straddle on 11,900 with premium of about closer to 100 points, which was yesterday. Today, the combined premium has fallen to about 60 points. So it's giving you that range of between 11,850 to about 11,950 in the near term for the day. So that's about the range, but let's see where the expiry takes place. But overall, our May series has been good. It was volatile, but Nifty did surpass that psychological level of 12,000. We've not closed above that. I think that remains key now.
It does indeed. And of course, we've seen plenty of resistance around that level. But let's talk about stocks which are also looking at a surge in open interest, which are extremely active. And right at the top, we have Dr. Reddy's, a 44% increase in open interest, but the underlying advancing by less than 1%. PC Jeweler down another 5.6%. And we're going to talk about that in a little more detail just in a bit, because there has been a significant discount there. M&M, of course, is the other one, which is, really under a little bit of a loss, under a little bit of pressure, considering we have seen some downgrades coming on that one. We'll also be talking to the management in just a bit. Bharti Airtel and United Spirits, among others, which are also looking at some amount of pressure. Let's talk about stocks which are seeing a decline in open interest, unwinding coming through. Diwan Housing Finance, Glenmark Pharma, Kaveri Seed Company, and this I imagine will be largely on account of rollovers, which will be another very important factor to keep an eye on. But for now, watching out for some of these names, but we're also keeping an eye on the indices as we move forward.
Okay, but three stocks where we would like to get views from our technical experts. One of them is Cadila Healthcare, an underperformer for the May series. The stock's down nearly 20% so far in this series. In fact, today we also had a report coming in from CLSA, which has maintained its rating on the sell rating on the stock with a target price of 250. The other one is Apollo Hospitals. The company comes out with its numbers today. Ahead of that, we've seen some traction coming back. The stock's trading in the positive territory, and it's also trading around its 100-day moving average. And an outperformer of the May series, that's Manappuram Finance, post its numbers. The stock has seen a good run-up. In fact, it has been trading around its all-time high levels. And if you were to look at this counter, it's up about 11% for the May series. There were a few days when we did see some bout of profit booking kicking in, but once again, the stock's up and about in today's session, Agam.
Okay, on that note, we will get in our experts, but here's a reminder, if you have any queries regarding futures and options, you can call us on 022-454-04141. Of course, write to us on Twitter, Facebook and YouTube with the AskBQ hashtag. Let's get in our experts for the day then. We have Mr. K. Subramanyam of Altamount Capital and Gaurav Bissa of LKP Securities joining us on the show. Good morning to both of you. Gaurav, let's start with you. How are you going about benchmark indices now?
Good morning. If you look at the last few days, you've seen that there has been strong writing in 12,000 call and 11,800, as you rightly pointed out in the beginning of the show. However, 11,840, 850 was the immediate breakout area. We retested the breakout area and we were quite hopeful that if this particular level is sustained, we can see a bounce back towards 11,920, 940, and we have already seen that. So if you want to have fresh trades, I would wait for a dip, and a dip towards 11,875, 870 can be again bought. Keep a stop loss of 30-40 points on the upside. 11,940, 950 is what I would be looking. Bank Nifty is more of a clear trade for the reason that it gave a strong breakout on daily as well as weekly charts above level of 31,100, 31,200. We retested the breakout levels today, and from exactly those levels, we have seen a bounce towards 31,400. So a dip in the market in the Bank Nifty as well, a 100-point dip would make it very lucrative. One can keep a stop loss of 31,200 on the upside. 400, 500-point upside in next two trading sessions cannot be ruled out. If you talk about the option trade, then buying a Bank Nifty 31,400 call option at 55 rupees, it's trading at higher levels as well, and dip in that as well can be bought. Keep a stop loss of 25 rupees and it can double. So for me, I'm waiting for a small reversal, a small dip. I would be buyer in Nifty as well as Bank Nifty.
Nifty and Bank Nifty, in fact, that's been the template of this market. We've seen buying coming in on every dips that we've witnessed, at least in the last 2 to 3 sessions. Mr. Subramanyam, good morning to you. How are you approaching this expiry day? Would you take any trade today?
Yeah, morning Navneet. I think we have to go with the momentum. Of course, today we will have some expiry jitters, and maybe towards the afternoon, since the global markets have also been pretty negative, I think probably that could be a bit of a bother, but otherwise broadly the trend should continue. So I'm recommending buying of June 6th, that is the next coming week's call of 11,900 strike. That's quoting at around 90, keeping a target of 150, and maybe one could keep a stop loss of 45.
Okay, so some pretty straightforward strategies coming in from our experts. Let's talk about stocks then. Mr. Subramanyam, I come back to you. How are you approaching the stocks?
Yeah, I've got two plain vanilla calls. First one is GAIL. Now, yesterday's market saw some pretty sharp profit taking, but GAIL was holding on, and I think post the results, and ever since we have seen the stock consolidating above levels of 350, I think this looks pretty strong, and we could probably see the stock advancing in the coming in the month of June as well. So keeping the expiry today in mind, a speculative play, recommending buying our 360 strike call. That's quoting almost, it's quoting at less than a rupee. It's almost 70 paise. But I think we could see the surge continuing and keeping a target of 3. So for in terms of risk reward, should be looks pretty favorable. And Biocon, last couple of days, that 520, 530 levels, we have seen some pretty good buying. Even the delivery-based buying seems to be good. So one could possibly buy the 540 strike of today's expiry at around 5 to 6 rupees, keeping a target of 10, and maybe one could keep a stop loss of 2.
Okay, so those are some stock-specific ideas, but on the option side coming in from Mr. Subramanyam. Remember, the IT pack we've been highlighting for you. In fact, Nifty IT is up and about for the 3rd straight day. It has been outperforming. Gaurav, in your strategy list, we've also got NIT Tech featuring from the IT pack. Tell us the rationale behind it, because we've also seen the large cap stocks going up from the likes of Infi and TCS, and you also have a long call on LIC Housing.
Well, yes, if you look at last few trading sessions, IT has supposedly found its mojo, and it's been trading quite strong, and it has been giving the much needed stability to the markets overall as well. And if you look at the larger name, as you mentioned, TCS has given us a very strong performance in the last couple of days, even Infosys from 700 odd levels to around 740. We have seen that also happening. And if you look at NIT Tech specifically, it has been generally trading in a range. 1250, 1300 has been the range. If it sustains the current level, we can see some amount of upside coming in. It can go towards around 1335, 1340. One can keep a very small stop loss of 1% around 1285, and buy Enertech. It has been underperforming. It's coming out of the consolidation. Decent amount of additions have been seen. As far as LIC Housing Finance is concerned, that is looking very strong. It has given a very strong breakout. A triangle breakout has been seen on daily as well as weekly charts. Strong additions have been seen in the F&O segment. It can go towards 600 with relative ease. One can keep a stop loss of 550 on the upside. Position targets of 600 can also be quite possible.
Okay. Well, on that note, before we talk about stocks that we want to go ahead and address, I also want to take up PC Jeweler, and the reason behind this is because of the significant discount that it's been trading at, and we do know that beyond June it is going to cease from operating in the futures and options space. And so its discount is actually narrowed in comparison to what we have been used to over the previous few days. But I'm sure that given the kind of weakness, there will be a lot out there who may be tempted to short PC Jeweler for perhaps the one last time, for perhaps the one last expiry. Is that a good idea? Is that a good move? Currently at 81. And it's May futures at 78. If we can also have the June futures and see where that one is trading, because that may also give you a better idea of how. Okay, so here the discount is a lot deeper, as you can see, 9-point discount, and there has been an increase in open interest. So how can we go about this? Of course, rollovers are at 63%. So rollovers naturally have certainly picked up, and this, I am assuming, once again is largely towards the short side.
Just want to add here, Agam, I think the stocks also come out of the F&O ban for today's action. So probably the activity can be heightened because you can take more positions now.
Absolutely. That's actually a very important point there. Okay, Gaurav, I take this one over with you. Would you advise going short, or for that matter, taking any position PC Jeweler, especially keeping in mind it's going to move out after the June expiry?
Shorting is not. I would be recommending it. One, we are not very aggressively pitching this idea whether long or short, and at these levels, shorting does not make too much of a sense. It's trading near the 200 DMA average also. And if I'm looking at daily charts, it's forming a bullish shape equal CD pattern, harmonic pattern. So if it sustains the above level of 82, 82.5, then we can see some spike sort of coming in. But shorting at these levels, I would not be recommending.
Okay, I'm not recommending to short. Remember, it's a high beta counter as well, and it's a beaten down counter, currently down almost 6% in trade. Let's talk about the other underperformer, which is Cadila Healthcare. The stock's down almost 20% for the May series. The numbers were not that enthusing. In fact, CLSA has also maintained its rating of sell, giving it a target price of about 250. The stock's down 1%, and the rollover stand at about 76%. Mr. Subramanyam, if you look at the charts, what are the technicals suggesting for Cadila Healthcare? What's the level from where it can bottom out? And if somebody is holding short positions, would you advise them to book profits now?
Well, anybody holding short positions, I think one could possibly be a little bit cautious, because I think it's now reaching a level where it looks extremely oversold. So I think the bottoming out phase could end around 245, 250 levels, and probably that from those levels. In fact, if we do see some sort of some stability, we may be tempted to buy also. So current levels, I would still probably not advise any shorting. Wait for that level of 240, 245, or even 250. I think those could be levels where one could look to go long in the counter. And I think if things, if there are no more negative things coming, normally this counter has been pretty stable over the years. But strangely, last 1 month or a couple of months has been pretty savage, and we have some correction. So wait for those levels, as I mentioned, 250 thereabouts. And at those levels, one could probably keep an eye on it, and maybe think of taking a contra bet.
Okay. Let's move in and talk about Apollo Hospitals. It's been in and out and around its crucial moving averages, and rollovers have certainly picked up. We must also remember that it will announce its earnings a little later on, which makes it poised very interestingly at this point in time. We haven't seen as much in volumes, but we have also seen a little bit of a recovery of late over the past 2 weeks, if I can call it that, from about 1100 and 1112 odd levels to currently at over 1210. So we certainly are seeing a little bit of traction, a little bit of gains coming in, but you never know F&O, and this is one of those stocks which is susceptible to large moves once the earnings are out, depending on how the earnings are. But Mr. Subramanyam, I come back to you on this one. Your view on Apollo Hospitals, how would you go about this one?
Actually, I can't see any trade as such in this particular counter because it has been in some sort of a range. And if you actually see, I think from 1100 to I think 1250 thereabouts, I think this has been some sort of a range. So I don't see any trade at the current juncture. And today being the results, I think I definitely give it a pass.
Okay, that's the view on Apollo Hospitals. The stock remains in focus as it comes out with its earnings. Ahead of that, I think it's cooled off from the highs that we'd seen of the day. It's just up about 0.5% as we speak. Gentlemen, stay on with us while we address our conversation with the management of M&M. Mahindra and Mahindra's results for the March quarter were better than what at least the analysts were estimating, but it did remain on the weaker side. It has also guided for a 5% tractor volume growth in FY20. Let's discuss the quarter gone by with VS Parthasarathy, the Group CFO of the company. Mr. Parthasarathy, good morning to you and thanks a lot for joining us today on Bloomberg Quint. Well, if one were to look at the margins this time around, we did see some bit of outperformance as compared to what the street was estimating, but the farm equipment segment that continues to suppress your margins. You've also given a guidance for FY20 for your growth in terms of the tractor business, which is just about 5%. Could you throw some more light? Do you see more headwinds around this sector, because we've already seen 3-year upcycle now coming to moderation?
Yeah. Thank you, and always nice to be on Bloomberg Quint. Coming to the result, I think last year was a fairly phenomenal year, and in the quarter on quarter we missed that perspective. If you take our own full year, it was the highest ever PBIT, EBITDA, PAT. Okay, and we say that as the start of cricket season, we have a half century at 50,000 crores mark as standalone M&M, and in consolidated we got 100,000 crores revenue. So we also saying that in cricket season we also hit a century and a half century respectively in that front. And also in terms of profit, if you see year on year on a full year basis, our top line grew 11%, our PBT grew 14%, and our PAT grew 30%. So a very profitable revenue growth story. But our quarter fixation actually does not allow us to look at a broader picture. So some quarters are soft, some are heavy. But overall last year was amidst a very tough environment, very good performance from M&M. But that's not the question you asked, I know. You're asking about tractor and how do we guide for future. And that's what we thought, that next year, the tractor volume growth is about 5%, presuming as near monsoon and slightly lower than normal monsoon into the picture. And what's happening is it will be almost like a tale of two halves. What happened last year, our F19, was that the first 5 months of the year were very, very robust. So it has a very high base. The next 7 months were fairly subdued. So when we look at this year in the context of previous year, the first 4 or 5 months growth will have to be on a very high base. The second 7 months will have to be growth on a lower base or a softer base. So it from a year on year, therefore it allows us in the second half to catch up from the first half. Second is, right now there is a lot of liquidity crunch in the market, especially because of NBFC situation. And within that, MFSL is in a great position, but NBFC as a whole group today are in a very tough area. And liquidity is a major concern. So that today may be hampering. Banks, overall liquidity may be hampering. The fact that monsoon is in the annual may be hampering. The fact that we were in election fever and activity may be more focused elsewhere than here may be a factor. So first 2 months we are seeing some bit of softness, April and probably May. And hopefully in June onwards it will get recovered as the entire nation focuses on growth and employment. So I see a lot of growth. So 5% is built from that. Is there upside to it? Certainly there is. And 5% volume doesn't convert to revenue. Revenue will be higher than 5% if 5% happen, because realization do go up. And then on top of it, we have implements and attachment, which we call non-tractor revenue, is growing at a much faster pace, because we are tractorized, not mechanized in India, and it is our attempt to make it more mechanized. And as we focus, our revenues on that front can be higher than tractor. So overall, I see a robust year, softer in the beginning, and hopefully, like every one day, if I use the analogy, as the overs start getting played, the speed of the scoring rate picks up.
All right, so what role will BS6 play, the implementation? If you could tell us a little more about how M&M's will preparing for that, and what is the expectation when it comes to pre-buying? What sort of impact can it have in perhaps the second half of the financial year?
Okay, so let me not steal the thunder of something that we are planning on Monday. On Monday, we understand it's a big issue. We understand everybody is very interested in understanding what's really, how prepared is M&M, what does it take as an industry, what does it take as M&M. So we have on Monday a press meet where we are tackling this subject in great amount of detail. So I'll only give you one headline. We are very well prepared to take care of BS6, and not only that, we can be economical and technologically superior, and you will see that on Monday. So that's broadly the top line. So we are well prepared. The second is transition, because the transition is 0-1 games. You know, on one day you have to stop selling all the old vehicles and start selling. So the supply chain is a bigger challenge, and that needs to be minutely. It's a more of a game of getting it absolutely, planning absolutely right. And I think we are well placed there. It's a challenge, but it's not that you can't surpass it. So overall, technologically well placed, commercially, you will see that we can handle it very well. And in terms of the supply chain management, we hope to do very well in fine tuning that as we come closer to it. It's not that portion is something that will change. Your next was pre-buying. So hoping that the cost overall anyway will go up, there could be preponement of purchases prior to that. And if it does, it augurs well for the industry and augurs well for all the players, because what, if any, a little bit of jerk could be there on Q4 can be preponed to Q3. But we are talking too ahead of time. I think as the time comes closer, we will see how this pans out. But whichever way, it will be within the year and benefiting the industry.
Mr. Parthasarathy, I'm sure the investors and the analysts will be waiting for Monday. I'm not trying to steal the thunder here, but just want to check, I'm sure you would be addressing this issue, or rather addressing this particular transition which the entire industry has to take to BS6 emission norm. As a company, M&M has high exposure to diesel vehicles which are expected to face higher cost going ahead. So just want to check that this will be one issue that you would address definitely, but would you also look to reduce the dependence on diesel vehicles, because the cost for those vehicles will be higher if one were to transition to BS6 now?
Okay, this is exactly the issue that we will take. Again, giving you an headline, we will continue to have diesel, and it will continue to spearhead the SUVs, because that's what comes with the terrain. As far as the thing is concerned, would we have options for the customer? We will have options including petrol, but diesel will continue. And as some people have said that there is a misconception that diesel and BS6 don't go well together. I think in our case it does, and that's what we will share with you on Monday.
Okay, we'll wait for the details on Monday, and thanks for giving that headline to us that you will continue with the diesel vehicles. You mentioned about SUV. I'm just reading one of the brokerage note which has said that there was a sharp fall in legacy SUV volumes which have eaten up into the benefits of the new launches that the company's made. Could you elaborate more on that your legacy SUV business has been a laggard?
So just to, I think this is one of the analyst report, and I'm sure he or she can kind of give you much more color of what their thought process is. But our thing has been always been saying that our legacy products, or what we call evergreen products, have been our stars always, and I'm sure will continue to do. So let's take for example Bolero. The Bolero did again a great volume last year, and Bolero pickups did in fact is one of the stars. And if I saw the chart yesterday correctly from Rajan Vadera, who presented it, is 160,000 kind of vehicle volumes that we sold. So in under no circumstance can we say whether SUVs or pickup, there is legacy pickups, there has been any slow, or to take for that matter Scorpio. So they've done very well. Now what we are trying to do, and which is to have new products, like let's take XUV 300. It's a sub 4 meter, it's a compact SUV, and that's a new segment that we are going. Inevitably there will be some cannibalization, but we hope that it is taking the cannibalization that it does is more to the industry of sedan and some bit of competition vehicles around it, and very less of cannibalization within M&M. Similarly, Marazzo is an MUV. We never had an MUV, so it's a new segment vehicle, and we hope it is all in its incremental volume. So maybe 10-20% cannibalization could be there, but we believe that there will be huge incremental volume.
Sure.
So this is what is my take, and I hope eventually the industry will follow that. And analysts will accept that.
Sure. Before I let you go, the industry, overall the auto industry has seen its worst slump in the last 5 years, and I know there were liquidity issues because of what happened to IL&FS last year. But tell us, going into the budget now, do you expect some sort of GST rationalization from 28 to 18%, which could provide some relief to the sector?
Yeah. We are waiting for 2 or 3 things as the new government comes in. One is that there is a lot on manifesto, and if they are implemented, that should give a huge amount of positive impetus. We are waiting that it should get kicked off, and action when it moves towards nation building or economy revival, and I think all of us will benefit. Second is this liquidity crunch is a short-term issue right now facing us, and therefore anything that we do to move this forward will be of great interest. The third thing is GST rationalization, as you said, anything which makes it more attractive for customers to buy. And currently it seems to be on a higher pedestal, the GST for this. And if you go by the norm that everything should be at 14%, clearly this is off the mark. And any positive action in this will positively benefit the whole industry and M&M. So we are waiting with a lot of hope and a lot of, I think optimism towards what is going to be done in the next few days and few months.
Okay, Mr. Parthasarathy, we'll leave it at that. Thank you so much for joining us and taking us through the many updates that you have given us with respect to M&M. And of course, we'll be watching out for all that you can tell us on Monday as well when it comes to the outlook going forward. But, if we do have our experts with us, there's perhaps just one time. All right, I think we have run out of time on this show, so I'm unfortunately going to have to thank both our experts, Gaurav and Mr. Subramanyam, for joining us and taking us through their views on the markets. For more updates on the F&O space, you can also check our website, bloombergquint.com.
Okay, with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching, but stay tuned to Bloomberg Quint for more news and updates.